I'm speaking with Harry Sugiarto, Portfolio Manager, Multi-Sector Credit at ICG. Welcome, Harry.
Good morning, James.
Great to have you at the Income and Defensive Assets Symposium. Harry, the whole reset in which rates have repriced to far more normal levels at such a rapid pace, do you feel the whole ecosystem, especially asset allocators and advisors and advised clients, have fully appreciated the extent of the reset, or are we still playing catch-up?
James, I absolutely agree that there is a period of readjustment that's taking place, particularly in investors' psychology around where the yield environment is right now. Quite frankly, it's very easy to be lured by a 10% nominal headline rate, but we have to remember that really 4 is the new 0 and 10 is the new 6, and that's a progressive adjustment that's taking place in the market.
There are concerns, there always are concerns, but particularly at the moment, about the broader health of the global economy, higher rates and subdued confidence. So do you see certain sectors at being much more heightened levels of risk?
We absolutely see this period of uncertainty as sector and geography specific. I think it's natural to think of interest rate sensitive sectors as being most vulnerable to the current environment. Building materials, construction are really front and center of the ongoing downturn, and that's where both the risks live, but also where opportunities may live going forward.
What impact would a recessionary environment have on your strategy?
Well, I think first things first, you have to go back to basics, and our philosophy is to re-underwrite everything that we already own for the existing environment that sits in front of us. I think the current environment, rather than thinking very rigidly about positioning, being flexible, looking for opportunities as well as ongoing risks, and using the market and trading proactively is very much part of our playbook.
What characteristics do you look for when narrowing down your investment universe?
Well, firstly, exclusions matter and exclusions exist across our portfolio, and that's something that is a prerequisite at ICG. Beyond that, I think what we are increasingly focusing on is this alignment of interest between creditors and equity. We want to know that a sponsor will stand behind a business if it goes into trouble, and that not only will, let's say, protect the company, but also protect our position as creditors. So for us, understanding sponsor motivations, sponsor capacity, that alignment of interest between different stakeholders is absolutely key in the current environment.
This event is being delivered to leading advisors in Sydney and Melbourne, 2 cities which share one of the world's great friendly rivalries. Coming in from the UK, Harry, which of the 2 is your preference and why?
Well, I love both cities. I think they're fantastic places to visit. I always have great engagement here. But when I travel to Australia, I pack light. And packing light for Melbourne is virtually impossible. So, Sydney by a shade.
4 seasons in one day.
Exactly.
Thank you very much, Harry Sugiarto, ICG.
Thanks, James.